and welcome to my YouTube channel. My name is Phil Grande, philsgang.com. Okay, we're going to talk about tonight this big, glorious, big rally. Kudlow, who is the biggest, bullshitter in the world, was trying to sell us this week. Play. What
we are in a boom, all right? We're going to get 8, 9, 10% growth in the first quarter, maybe the second quarter too.
Okay, 10% growth? Wait a minute. We've had a GDP growth. We haven't had 3% since 2005, the last time we had 3%. If you take just from 2008 to today, we're at 1.7%. 1.7%. How are you going to go to 10%? Let me show you how they plan on doing it. They've already put in $8 trillion to grow the economy. $8 trillion. Oh, they're not done yet. They're probably going to double that. They're going to double that with stimulus. Oh, by the way, he said, I don't understand why we need stimulus. The economy's booming. Well, because they know it's not booming. Stimulus is a life support. It's always been a life support. It'll never change. That's the truth. And he says, gee, I wonder why we need stimulus. Because it can't sustain a 10% growth. It just can't do it. It's impossible, okay? All right, first of all, inflation is a killer, okay? And they're doing everything to keep inflation down. They are lying about inflation. Every day they're lying about inflation, okay? They never tell the truth. In fact, when they came out with their inflation numbers, what they did, this was really interesting. What they did is, remember we had supposed to be the biggest housing boom from March 2020 to current, right? But remember how they keep the number down so there's no inflation. Remember, houses went up between 10% and 30% depending where you are in the country. But they're able to keep them down because they switched the formula. Instead of using the actual inflation rate of a house, what they do is do what they call an owner's equivalent rent. So this way here they can press it down. Again, more games, more BS. All right, now listen to this here. This is amazing too. Okay, so everyone thinks, okay, that we're going to have this big stock market rally, this big growth in the economy, 10%. Well, how do you grow an economy? Okay, you grow an economy. The first thing you do is decrease your debt. You got to decrease your debt. That's how you grow an economy. You don't increase your debt. Now, let's think about it. Since 2008, right here, 2008 to 2021, they increased the debt by 211%. Okay, 211% from 2008 to 2021 to drive the stock market about 475%. So they increased the debt 211% to drive the stock market up 475%. What are you, nuts? Another thing they are doing. Just remember back here on March 20 to March 21. That's been a year now, okay? They increased the debt 67%. To rally the market 91%. Oh, and by the way, you know the 21 trillion increase in value during this rally of 2020 March to March 2020? Who got that money? It should have gone into productivity. It should have gone back into wages. Should have went into production, new equipment. No, what they do? The 1/100th of 1% took 68% of it. 68% of it went to the top 1/100 of 1%. 27.6% went to the next top 10%. And oh yeah, Main Street got screwed. 4.3% is what they got. Main Street through their 401ks, which they end up with nothing because the 27 hidden fees wiped that out. Unbelievable what's going on. Now let's take a look at this, what they're doing. This is crazy, okay? They're telling us we're going to have this big booming economy. Remember how you get booming economies. First, you cut taxes. You got to cut taxes. Next, you cut regulations. Next, you cut debt. Next, increase business investment, increase productivity, increase wages. When you increase wages, when you increase business productivity, you increase wages, increase spending. Spending is what grows the economy. It contributes 72% of our GDP growth. That's not what they're doing. Instead, what are they going to do? They're going to increase taxes, not cut them. They're going to increase regulations, not cut them. They're going to increase debt. They're already doing that. It's insane. They're going nuts. AOC wants to increase the debt another $10 trillion. We're cutting debt. That you got to cut debt, not increase debt. I mean, this is absolutely insane. They're lowering business investment. Instead of doing business investment, remember what business investment does. It increases productivity, which increases wages, which increases spending, which increases your GDP. Oh, they're not doing that. Instead of business investments, we don't need that. They're replacing it with stimulus money. And that means their productivity is decreasing. Their wages are decreasing, okay? Because remember, they're going to be increasing the taxes. And when you increase taxes, that's a real problem. When you increase taxes, the first thing corporations do is they cut payroll, they cut jobs, and they especially cut wages, okay? And they cut spending. This formula right here is crazy, and it's unsustainable, this so-called 10% GDP growth. Now, one last thing. Most, okay, investors, they have no clue. All these people are jumping into the market once again, the big tech stocks, right? The FANG stocks and the growth stocks. Here's what they don't understand. There is such inflation going on right now, okay? The run rate in inflation is 11%. That's the real run rate, because remember, they don't count half the stuff they're supposed to count. Also, most investors do not understand why high yields hurt big tech and big value stocks. Just take a look at Tesla's having a difficult time moving back up because of the high yields, because it's the way Wall Street values them. The higher the treasury yield, the bigger the problem for the stock. When yields rise rapidly, like they did in February 2020, right, when they did that in 2020 and they ran, okay, remember what happened? They ran from 0.85 to 1.25. And what happened? Big yields collapsed. Big yield stocks corrected 10%, right? But then what they do? They turned around and they lied and said, oh, there's no inflation. It's temporary. So keep buying tech stocks. And everybody's buying these big tech stocks, right? And even though the yields are between 1.62 and 1.72, they're still in there buying big tech because they have no idea what they're doing. It's called dumb money, okay? Now, it's okay if you know what you're doing and you can play the momentum side. We're doing that with our charts, playing momentum. But 99% of the people don't even know what that means. So here's the bottom line, okay? We do not have a sustainable GDP growth, and we don't have a sustainable stock market. Now, I believe yields are going to run from where we are now, an average of, let's say, 1.65 to 2.7, probably be by the fall because of all the debt. Now, remember, Europeans, everyone is dumping their bonds, they're dumping their treasuries, and they're in there printing money, trying to buy those yields and keep those treasury yields down, to keep interest rates down to zero. But it's a losing battle. Okay? They can't do it. And every time they print more and more money, that takes the value out of our money. That is inflation, okay? We buy less. It's unbelievable what it's doing to our dollar. So they're going to do everything they can to artificially keep pushing up the big tech stocks to try to lead the market again. But it's not going to work because the big guys selling their treasuries, countries are selling their treasuries. That's bringing the yields way up. It's an ongoing battle, okay? So let's keep an eye on the treasuries. We'll report next week about it the same time here right now, a report on the treasuries, on the yields. And I'm telling you, don't listen to what they're telling you, okay? The rally they have right now is unsustainable. The GDP growth, even if they get to 10%, is so unsustainable. Thank you for listening. Please go to my YouTube channel. And by the way, please listen to my radio show on your YouTube channel, okay? And make sure you sign up, okay? Or you like and subscribe, okay? Like and subscribe, sorry. All right? So I will see you next week, the same time. Please, again, watch those treasury yields. That's where the answer is. They're all full of crap, these people. See you on the charts. Remember St. Jude's, please.